Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom are my co-hosts, Brad Lyons and Matthews Barnett. Happy New Year, guys.
Well, Happy New Year to you, Casey.
Happy New Year. How's it going?
It's going great. It's 2021. And have you guys broken any of your resolutions yet?
No.
Not yet.
Let's talk about that. What are some New Year's resolutions you want to share with our audience? Maybe we can hold you accountable.
You know, mine's going to be a little out there, especially for a 61-year-old man. I want to wakeboard. I want to get behind the boat and wakeboard and just have a great old time.
So how are you going to do that if you have to drive the boat too? Because you're the captain. How's the captain wakeboard?
That's why I say this one's a little out there. So I got to get, my kids to drive the boat, which they'll do. But, I'm not sure that I'm going to ask them to be the ones that show me how to do this. I may find someone else to show me how to do this. They're so great at it that they're showing me up, and I can't have this anymore.
I just feel like if you put adult kids in charge of dad on the back of the boat, that there might be some payback.
They're going to sling you around. Be a little rough out there.
You may never stay up on that board.
And then you just get this, shrug of the shoulders, say, what happened?
Right. Exactly.
So I want it to be a surprise that when they pull me and I'm up and I'm going, they are so surprised.
Right.
That they can't think fast enough to dump me.
If we have any wakeboarders out there that would like to give instructions to Brad, Brad will be
yes. You can call me here at Wiser Wealth Management.
Happy to take lessons. I mean, that actually seems achievable. I mean, most people are like, I'm going to work out every day. I'm going to get healthy, and then one drive past Krispy Kreme, they're done. So this one, I mean, that actually seems obtainable. Maybe not in January on the lake.
No.
Maybe like rockboarding.
See, and I can even put it off for several months and not have broken it yet.
That's true. You have the intent.
Well, mine you probably just made fun of a little bit, but it is the kind of stereotypical one. I think just working out a little bit more. It's easy to make excuses, but I think if you set aside time in the morning, then you go ahead and check that box and get that out of the way. So mine's going to be the basic one like that. I think it's kind of important to remember, too. I actually looked at a study by U.S. News and World Report that actually 80% of people don't follow up on their New Year's resolutions. So hopefully we can be in that 20% of people who actually do follow through on that.
Well, that's probably because the 20% aren't trying to be more healthy. They're trying to learn the wakeboard, like Brad, right?
They still do it, yeah.
Mine, I think, is just win the morning. I think some mornings I tend to stay up late doing work, but maybe I need to flip that and wake up and do some of that work when I'm the most refreshed. That just requires going to bed sooner, which is sometimes hard to do in a house with 3 children. But I don't know. It's working now, so if I break the resolution, it's not the end of the world. But doing some work before the sun comes up, I don't think there's anything wrong with that for sure. Maybe the dog gets a walk at 5 o'clock in the morning in my neighborhood. I don't know.
Dogs become creatures of habit. You do it for them one
That's
time.
True. You can be my accountability partner.
Yeah.
All right. Well, hopefully we can stick to that past the first week of January. So this podcast episode is really about our picks and predictions for 2021. We've never really done this as a group before. We've by the way, this is podcast 30. That's exciting.
Yes,
right?
It is.
The 30th podcast. We should be experts at this now. We have more than 4 people downloading the podcast, which is good.
That's more than that are producing the podcast.
Yes, that's right. Exactly. Our picks have certain criterias. We're not going to pick individual stocks. We decided that we would focus on more like sectors or asset classes. And Brad, we'll start with you. Let's. What is your pick for 2021 for in investing?
Well, mine's an investment theme. It's the idea that, we saw come to fruition somewhat in 2020, and that is the idea of technology disrupting the common industry. Technology being additive into our lives and into our businesses and into our social fabric so that it is disrupting and enhancing the way we live and the way we work. Things like teledoc, work from home, meetings over our computer through the common one is Zoom. It's a crossroads between innovation, technology, and industry. It's the application of new technologies. Now, for the past 2 years, we've seen technology have great runs. When in 2019, it was up 50%, followed by another 40% in 2020. Just so that the pure technology had a tremendous run. Now, applying that technology into usage in our everyday lives and into industry, is the innovation. Casey, you remember, in early 2020, you and I went to a conference and we listened to a speaker talk about something called the idea multiplier. I thought that was the most interesting talk I had heard in a long, long time. Then late last year, Vanguard put out a white paper. They have a research group, and they have a theme called Megatrends, and they'll put out research papers on different ideas. And they put out a white paper on the idea multiplier. Now, for those that haven't had the chance to hear about the idea multiplier, it's this idea that every good idea begets more good ideas. Other ideas and innovation are spawned from every idea. And this goes back to way back in time. Some caveman saw a rock roll down a hill and got an idea. That'd be like a wheel. I could make something turn and I could push things. So one idea got another idea. And then as time goes on, you find that through sharing ideas, you bring other people into the process and they get ideas. So we went through a 1-to-1 idea multiplier all the way through, I'll jump all the way to the 1980s, and it was thought to be that there was about a 40-to-1 idea multiplier. So every one idea spawned 40 other ideas. Currently, it's estimated that the idea multiplier is 400-to-1. So for every one idea, that brand new idea, there are 400 other ideas spawned from that. That's innovation. It's taking those ideas, creating new and emerging technologies that can be utilized in business and in life, and not just disrupt the world, but change the world. And that's where I came up with this idea of investing in innovation. Now, there's some innovation funds out there, and I think one that's done extremely well this year is one from ARKK ETFs, and the ETF is ARKK, Innovative ETF. Now, it has a tremendous run this year of 162% in 2020, and it's not likely to repeat that. After all, its largest holding throughout the year was Tesla, and we all know what Tesla did. But that's a great example of innovation. It took a car concept and changed it into an electronic vehicle that has other applications at the same time. It's still a car, but what's driving it is something that we're going to hear more about later, and that being an alternative energy source. And from this, I'm sure we'll see other ideas, such as more autonomous driving, etc. Some of the other companies that were in ARKK was Roku, Square, Zillow, Teledoc. These are things that a year or two ago we had never heard of, but now are becoming commonplace industries. It's, again, I want to emphasize, I believe it's the intersection between technology and industry. Another ETF in that category is the S&P Kensho New Economies Composition Fund, symbol KOMP. Now, compared to ARKK, its return was a mere 56% in 2020. Again, it's innovation and transformation. This ETF is a little more global in nature. So you'll find securities in there from all around the world. And that's really where I wanted to put my pick for this year, was in the investment theme of innovation. And those are two examples.
That's great. Innovation, I'm amazed every time I see a SpaceX rocket blast off and then the rocket returns to a launch pad. I think that's so cool. And I think about the shuttle program, and while that was a success, it never really achieved its objectives. We're supposed to be launching a shuttle, every 2 weeks, and that never happened. But I'll say that that was all government run, and now here it is, a private industry, SpaceX, a private company, is able to achieve all those objectives. What's going to come out of that for everyday use? You think about Velcro and all kinds of things that came out of the shuttle program. Tang,
sure,
freeze-dried ice cream.
Sure.
So yeah, I'm excited about that pick. I just because I like, the shiny objects.
Well, sure.
And that's a whole portfolio of shiny objects. That's incredible. Think about even Tesla, their business model was to develop these really fast cars. I saw Jay Leno last year interviewed on CNBC. He goes, I bought a Tesla. I didn't buy it because it was green. I don't care about green in cars anyway. He's a car guy, right?
Right.
But I bought it because it's the fastest car on the road. And but they're selling to guys like that on the high end, and then they're also putting in infrastructure so you can go across the country now in a Tesla. But eventually, those profits get poured back into cars for everyday people. So we already have one, I think, around 40,000, Model 3, I believe, and then there'll be models that'll come out that'll be cheaper than that. Hopefully, cooler than the Leaf. Leaf's a cool concept car, and it was free for a few years, the tax credit, but it was not a car that you like. Cause look what I got. Where I think all the Tesla cars are like driving an iPhone. That's what it appears to me when you look inside at the dash and how it all integrates. But and that's another one. Apple talking about coming out with cars in 2024.
And talking about this whole idea of SpaceX and Apple at the same time makes me think of the thought that there is more computing power in an Apple phone than there was on
the Apollo program.
That's right. That landed on the moon.
That's right.
Yeah.
Which is a testament to those brave adventurers that strapped themselves to those rockets. Looking back on it, you're like, God, those guys were crazy.
Now, just to mention on innovation, I just want to say that it's had a terrific run in 2020. It's likely that there'll be some pullbacks from time to time. And it's not because that there's a lack of innovation, but investors will tend to bid up these types of companies rapidly. And then we'll have to look at adoption rates to go along with that. So,
right.
But it's a good theme for a good many years, I believe.
Matthews, how do you top innovation?
Well, I went with another thematic theme, an ETF, the Invesco WilderHill Clean Energy ETF. So going green on this one. Actually, year to date, it's up over 200%. And most analysts are thinking it could continue or even do better next year, due to the fact of the clean energy movement, as well as the Biden camp really pushing some new tax incentives and initiatives beginning of next year. There's some similar ETFs out there like First Trust, iShares has one. There's another Invesco Clean Tech ETF. And VanEck Vector has a low carbon ETF. It's actually got an interesting ticker, SMOG. But there's a lot of other ones out there. This was kind of leading edge. A few of the top holdings are Fuel Cell Energy, Blink Charging, Neo Inc., SunPower Corp., Livent Corp., and DACO New Energy. So these are all smaller cap companies that are kind of leading edge in the green movement and initiative. There's actually 46 green energy stocks included in this, anywhere from solar energy to lithium mining, and as you mentioned, electric vehicle makers, which I think a big part of Tesla moving forward won't just be the cars, it'll be their batteries, being able to be off the grid and power the power sources that those batteries provide. So I really think this kind of be another thematic way of innovation, but really just the clean energy movement where we are today and moving forward, the initiatives that help support that.
It makes sense. I mean, Tesla sort of has I would love to see the percentages. I'm not going to speculate, but I would think that there's a low percentage of people buying it because they want the world to be greener. They buy it because it's a cool car, almost a status symbol as well, especially at the top end, 120,000 for a Model S that has the super speed built into it. But yeah, I mean, I can see that. I can see how green energy, especially with possible government incentives for innovation. Batteries are very expensive, so we can lower the cost of batteries. That makes everything cheaper. So yeah, that'll be interesting to see how that plays out. So now it's time for my pick, and I have to say that I like both your picks. I do. I thought about that and put a lot of thought into what I think is going to do well in 2021. And the more I thought about it, the more convicted I became of not having a pick. So you say, what? We're doing this partially for fun, because we're not going to overload a portfolio in tech. We're going to overload a portfolio in green as a firm. That's not what the client base is asking us to do. So I just thought about, man, if I could pick something and always be right in the long term, what would I pick? And it really comes down to the total U.S. stock market. And we actually this is a fund we actually use here within our firm, but it's Vanguard's Total Stock Market Fund, VTI. And VTI's did well in 2020, basically up 19.5%. Look at some of its top holdings: Apple, Microsoft, Amazon, Alphabet, Facebook, Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, Visa, and Tesla. So those companies are the top 24% of the fund. It has obviously large cap and small cap, mid cap built into it. It's a total U.S. fund. Technology makes up about 26% of the fund. But I guess the concept is this: we try to pick top picks because we want wins. We want quick wins. So I look at across the web. I look at, ETF.com, seekingalpha.com. I look at these websites that have their top picks and they're looking for double-digit returns at a minimum in a great year, maybe 100% rate of return. But those picks tend to be hot and cold. At some point, they sell off in dramatic fashion. And the way I look at this is we want to build wealth over time. It's not as fun. It's not the Tesla. It's more the Nissan Leaf of investing, right? But it's super cheap. It trades for free almost anywhere. Right? It should be anywhere. The expense ratio is 0.003 of a percent. So you can't get any cheaper than that. And the idea here is that, you're putting in money every single month and you're betting on America. You're betting on these companies that are at the top end. These are all the companies that we talk about. If you had Apple, Microsoft, Amazon, Alphabet, Facebook in your portfolio the last 10 years, you have an amazing rate of return. And that's kind of what we're seeing here. Now, that is cap weighted. So that simply means that you weren't getting these companies at the very beginning, at the early stages. You got these companies more in the middle stage of their run-ups, where the funds that you guys named are going to have the companies would show up in there first before they would get bigger, obviously, and get added to a Vanguard-like index fund. But I think we have to remind ourselves that it's important to focus on long-term success and not necessarily short-term gains or losses or short-term bets. There's an article, I think I posted it on my Twitter. It was last year or late last year when I posted it. There's a guy who put $10,000 into Tesla stock, and he was an innovator. I saw the guy interviewed, pretty much a plain guy, blue collar job, young guy. All the money he had was $10,000. He put it in Tesla stock. Now it's worth over $1 million. That is not how investing is supposed to work. I mean, that's a great success story, but I wouldn't, if I was educating that guy, I would not say, yeah, put all your money on this one and hope for the best.
Well, you hear that with Bitcoin too. The same results with Bitcoin. Now it's over 22,000. 2010, it was single digits.
It was also 3,000 during the COVID sell-off last year. So who's going to hang on? I mean, at some point, human nature kicks in. You're like, I can't take the pain. I can't take the losses. And you're going to sell because you know more than the market. But yeah, so it's a boring pick, but it's a pick that if people did every year going forward, they would have a great rate of return, great wealth, as long as they practice patience. And when it goes on sale during COVID crisis or during a financial crisis, whatever, you just keep buying more as much as you can when it goes down in value. So I think you guys have no comments on that. So I assume that I won the debate.
Sure.
And it's not just because you're the boss.
So let's kind of shift gears. Where do you think 2021 is going to take us? What's our year-end predictions of the stock market?
Well, Casey, I want to follow up on something you said because you nailed it. We're betting on America in 2021. At this time in 2020, we would have been having a very similar conversation. Who knew that we were going to see everything practically collapse in the next couple of months in 2020 from now, relative to the coronavirus, relative to the reaction, both political and economic, to the virus. Last year, we had no idea that was coming. This year, it feels a little bit like we know what the stumbling blocks are. We know that coronavirus is still there, but we know that there is a vaccination and a distribution process for the vaccination. We know that the vaccination has a very high efficacy of having a good result, protecting individuals from this. We know that the economy is coming back. And so it has a forward momentum to it right now. We know that inflation has been very low and is likely to continue to stay low. We know that the Fed has come out and said we are not going to even thinking about raising rates for a couple of years. We know that they've also restated their mandate relative to inflation, not just to keep it at 2%, but allow it to average 2% over a period of time, which means that they're going to allow it to float above 2% if they can manage that. So we know that more than this time of year than we did at last year at this time. So given that, and given that I am very optimistic, and given that my pick was thematic in innovation, I'm going to make, if not a prediction, a statement that I think we're going to see both the S&P and the Dow Jones have mid-teens increases this year. I'm looking for the S&P to finish around 4,200, which is 500 points above where it is now, which is about a 13.5-14% gain for the year of 2021. Looking for the Dow Jones to end the year at around 3,500. Which is about another 5,000 points from where it is now. So it'd be about a 15 or 16% gain. Okay. Looking for interest rates to remain very, very low. So when you have a 10-year yield at around 1% like it is now,
yeah,
where else is there?
There's a lot of free money out there. So if you read if you read a lot of reports like we do, small cap stocks should do well. Foreign stocks should do better than the U.S. stocks. I'm gonna flip that a little bit. My prediction is that small cap stocks regain their momentum, like we saw in I guess it was November, right?
Parts of the fourth quarter last year.
So I think small cap stocks give us somewhere between 10 and 12% rate of return, but we're going to have trouble with these all-time highs and rolling closures. I think that gets taken out on large cap stocks. I put large caps around, that'd be S&P 500, something around 8% rate of return for 2021. And then small cap stocks, they're going to benefit from the free money. They're going to benefit the most in growth if they have good CEOs. I think international probably more disappointing than what everyone's talking about. Just because, the tail end of fourth quarter, we already hear about UK shutting down. France is putting up barriers on the borders and for COVID 2.0. And I think that they're going to tend to, I might use the word overreact, but react differently than a free society like we have here.
Yeah, the international markets are going to still react in a more negative manner towards the coronavirus, COVID, than the U.S. markets are. So they're going to struggle a little longer than we are here at home.
And also, too, here at home, we're going to have lots of free money. We pay for that eventually, but at the beginning of free money, there's always some irrational exuberance on the stock market side. And so we're going to ride that wave up, I think. It's not on our program here, but there's some risks too in 2021.
There's still the risk that, the people don't accept the vaccine. People, it doesn't get produced and distributed as fast as we would like for it to. And there's the risk that the small businesses, actually fail. And you have a tremendous, highly high unemployment for a period of time until those workers that were in small business get reabsorbed into the economy.
Yeah. Well, it sounds like we're positive. That's good.
Very positive.
And I would love to see another positive year. We know that it's possible. If I'm going to bet on anybody, I'm going to bet on Americans. I think there's a lot of politicians, both sides of the aisle, that manage to screw things up. But I've always said, in times of crisis, it's the American people that say, screw this, I'm going to go to work and I'm going to work my way through this. If it takes 4 jobs, I'm going to do 4 jobs. And I'm always amazed about our ability to bootstrap situations. It's kind of in our blood. It's how this country got started. And no matter how you think about things, even those pesky millennials that we keep being told are just terrible workers, I don't think they're all that bad.
I believe you just picked Tesla. That's a pretty big millennial pick right there.
That's
too.
True. Well, you told me yesterday that a millennial portfolio was diversified by half Bitcoin, half Tesla.
That's right. The balanced millennial portfolio, Tesla and Bitcoin. And it would have done pretty well for you in the last few years. So I'm actually interested in seeing how that does for 2021. So it'll be interesting to see if those continue.
Matthews, do you have any great predictions for 2021? Are you going to just watch Brad and I fail miserably?
Yeah, I'm going to see if this ages well for y'all. I'm going to go neutral, but I will say I think the year should go well. There's a lot of pent-up demand, so there should be some good growth in 2021. So we'll wait and see, I guess.
All right. Happy New Year, everyone. We'll see you next week on the next Roundtable podcast.
Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.